Tamakaze here with a tutorial on our options flow AI in the financial cloud. I get a lot of questions on this, and so I figured making this tutorial will help answer all those questions and maybe put some strategies in your head on how to use it. So, just real quick, I want to go over what everything means. So, what is the options flow AI? So, we developed the options flow AI to detect large options buying activity and filter out all the noise to show us what we should care about. So there was a 20-year study on a lot of indicators in the market, and what they found was the only really predictive indicator that was reliable is using options flow to predict where a stock is going to go in the future. And while technical analysis can help with that, using unusual options activity and large buying activity has tend to really predict that. So I developed an AI that can help filter that out and show us what we care about and put it in an easy to digest manner. So the larger the number you see, the more relevant that the options flow is on that ticker, the more aggressive it is, and the larger the buying activity. So if you see a repeat call detected, that just means that in addition to large buying activity, there's also a bunch of smaller activity going on. So that should really reinforce that that is a good thing to pay attention to. And while we try to detect only opening orders, there's only a certain amount of ways to confirm those opening orders. And so we don't want to filter out all orders. We want to try to be cognizant of relevant orders. If we can detect and confirm an opening order, we will put that in the alert. This is important because if for some reason someone sells $5 million worth of Tesla and it's a call, you may detect that as potentially being an opening order when it's actually a selling order, and that's bearish, which would have the opposite intention of what we're trying to alert us to. We want when a call alert comes out, we want to buy calls. We don't want to have it be a sell. So just some general rules is always combine it with other TA. And while these are very reliable and have high success ratios, it is important to maybe combine it with other TA. So if you were to get this level 3 call here, you could, maybe you had a trend line right here and this came out right here. You might want to have waited for this trend line to break and then you buy it here, or maybe it was, maybe you were to buy it like right here. So maybe you're not getting in right away. You have a confirmation of a trend line, or maybe you get over on this level breakout right here. Whatever your form of technical analysis is, this is to help you combine that with that. So just keep that in mind. Again, don't go all in. Never go all in on anything. In general, you want to on an options order, you want to use a portion of your account. You don't want to use all of your account. So, and then always make sure if you're going in that you have an exit strategy. If you're buying, just blind buying a call off of an options flow or a put, you don't have an exit strategy, then you're never going to know when to sell it. So you need to have an exit strategy. And then kind of the ways that I take advantage, and what we have found through our data testing and back testing, is that if you get a level 3 or level 4, those are the most reliable. Level 1s and level 2s are very good on unusual tickers. On huge tickers like Apple and Tesla, I have found them to be less reliable. But on unusual tickers, I find them to be very reliable, level 1s and 2s. But most people seem to be interested in level 3s and 4s. There is a level 5 one that we have coded, but we have never seen it yet. So I am excited for our first one when we see it. So always buying in the money, an option in the money that is either if you get a level 3 call, you would buy a call, and puts, you'd buy a put. And a month out in the money is going to give you the highest rate of success. And so that is something I really want to highlight is we have almost 100% win ratio on level 3s and 4s when you buy 100% or a in the money month out. And what you're really looking for is you're not looking for that home run, but you're looking for those 10 to 15% returns consistently. I think we have a 100% ratio on those. So selling a credit spread or a cash secured option is also a great way to go. So instead of, you could take advantage of two things. You could take advantage of bullish movement, and then you could take advantage of time. So if you don't know what a credit or cash secured option is, this video is not about that. I would recommend watching some of my other videos or just searching on YouTube or Google to learn what those are. And then also, if you own 100 shares or leaps on something, this is a way to take advantage of it, to take advantage of calendar spreads, vertical spreads, um, and horizontal spreads. So again, research those, but the idea is if you were to own, say, a 2022 BABA leap and you got this put here, you would sell a weekly call to gather that premium off of that, off of your leap as collateral. So I would also recommend studying that. But these are great options right here, number 2 and number 3, that no one ever really considers because it's not something that many people talk about. But these are probably the 2 most profitable strategies in the business, but they're not the sexy strategies. Number 1 is probably the sexiest, shows you the biggest returns, but number 2 and 3 have the highest consistent rates of success. So again, this is just a quick video on what our options flow AI tutorial is. I hope it helped you in a little way, and always ask questions in the Discord if you're still not sure, and we're always here to help. Thank you and have a great day.